Who purchased $1.6 billion in Bitcoin on Wednesday and why? It's an odd coincidence that such a large trade occurred on exchanges with ties to Chinese customers during a week marred by China's capital market woes. As if a toddler in a car seat on a long drive, the cryptocurrency market asked the gnawing and obnoxious question, why? Last week. Why, specifically, did someone purchase a massive amount of Bitcoin worth $1.6 billion in a matter of minutes on Wednesday? While many view this massive purchase as a bullish signal, when one zooms out and considers the bigger picture, one that includes capital markets beyond the relatively small world of crypto, there may be more complex answers. Some clues as to why, and who, may be found in the what, where, when, and how of this massive Bitcoin trade. What? According to CoinDesk's Muyao Shen, a buyer or a group of buyers placed an order on a centralized exchange to purchase Bitcoin worth $1.6 billion. That is not insignificant. It represents approximately 4.5% of the daily average volume in the Bitcoin spot market over the last 2 months. That much supply entering the market in less than 5 minutes, from 13:11 to 13:16 UTC on Wednesday, is a lot to cram into any single exchange, or 3. It nearly immediately sent Bitcoin prices soaring by 5% to around $55,500. A buyer with a long-term perspective would exercise greater caution if the objective was to enter at the best possible price in order to mitigate the risk of slippage. Slippage is more than what occurs when a bartender overfills your glass and you walk it over to your table while George Thorogood plays in the background. The spread between the execution price and the midpoint of the bid and asked prices is what drew you into the trade in the first place. With a large purchase, filling each offer gradually increases the transaction price, and thus the average execution price. However, by doing so in stages, you allow new sellers to place orders that can be filled gradually but at a potentially lower price than if it were done all at once. Here's an illustration, albeit on a larger scale, of how one firm handled a significant Bitcoin purchase. When MicroStrategy purchased $450 million in Bitcoin last year, it did so in smaller chunks from Coinbase over a 5-month period, not in 5 minutes. While the price eventually increased over those several months, each trade did not cause it to surge with the ferocity seen this past Wednesday, thereby preventing CEO Michael Saylor's costs from slipping away as he bought. That was not the case this week with the buyer of Bitcoin who paid the equivalent of $1.6 billion. Wednesday's large buyer appears to have been in a hurry to complete the transaction. Where? Attempting to pinpoint the exchange that executed this trade provides some insight into the buyer's motivation. The price of Bitcoin on Coinbase increased significantly in comparison to other exchanges during the trade, leading some to speculate that the transaction took place on the regulated US exchange. However, further examination of the data reveals that the trade occurs in Asia. According to Qi Youngju, CEO of data provider CryptoQuant, 3 exchanges saw particularly high volumes in their perpetual futures contracts. While these 3 companies, Binance, Wobi, and Bybit, are not technically based in China, they have long had ties to the country, which recently announced yet another crackdown on cryptocurrency. Wales purchased $BTC in yesterday's perpetual futures markets, primarily at Binance, at Wobi Global, and at Bybit Official. According to the basis ratio, it was driven by futures, and they punted long positions as open interests skyrocketed at the time. "These guys are knowledgeable," Qi tweeted on Thursday. Qi speculated that one possible explanation could be traders taking large positions in anticipation of the Securities and Exchange Commission's rumored approval of a futures-based Bitcoin exchange-traded fund, ETF. The market became buzzy after the regulator's chairman, Gary Gensler, simply reiterated his previously stated preference for a futures-based exchange-traded fund, ETF, if one is ever launched. If this was an ETF front-running move by US whales, they are likely to use non-US exchanges to avoid being accused of insider trading, Key tweeted, refuting the notion that the trade originated with a Coinbase order. Coinbase's spot trading volume dominance has increased recently, but not nearly as much as it was earlier this year. That, once again, does not account for the traders' willingness to accept slippage. After all, piling all in with one large order a full week after speculation began would not be prudent or rational. That is not to say that irrational exuberance does not exist in cryptocurrency markets. For many participants, it is a feature rather than a bug. However, that is not a characteristic of an entity with the resources necessary to engage in a billion-dollar trade. Rather than their relative liquidity, the fact that these three perpetual futures exchanges originated in China, though they are no longer headquartered there, may be more significant. When? It's an odd coincidence that a transaction of this magnitude occurred on exchanges with ties to Chinese customers in the midst of a week marred by Chinese capital market woes. Fantasia, a Chinese real estate developer, missed a $206 million bond payment 2 days before the transaction. As a result, ratings agency Fitch downgraded the company. The situation is not unique to one company, as Standard & Poor's recently downgraded Cynic, another Chinese developer. Of course, the two are insignificant in comparison to Evergrande, the highly leveraged real estate behemoth that has been on the verge of default. Evergrande's shares were also suspended from trading Monday. Chinese Estates Holdings, another large real estate developer, decided to go private Thursday after the market slammed its stock by more than 40%. Chinese Estate Holdings is a significant Evergrande investor. This is a roundabout way of saying that the Chinese real estate market is experiencing severe contagion. That is detrimental to the country's economy, given that roughly 1/3 of its economic activity is related to real estate, compared to about 1/6 in the United States. How? However, there is more. While the purchase is referred to in the press as being worth $1.6 billion, it was not actually worth $1.6 billion in greenbacks. For starters, if CryptoQuant's key is correct, this was initially conducted in the perpetual futures market, not the cash market. This means that the initial buyer may not have received any Bitcoin. Nonetheless, it will affect the cash market, as the two operate in lockstep. Additionally, the transaction appears to have been largely conducted in stablecoin USDT, issued by Tether, which served as an entry point for many in China to trade on exchanges such as Binance or Wobi. The majority of trading volume was in BTC/USDT, Key explained about Wednesday's trade, which means buyers already possessed USDT coins. According to data from data site CryptoCompare.com, the pair of BTC/USDT outpaced the pair of BTC/USD, Bitcoin for the US dollar, by roughly 2-to-1 at the time of the trade. This means that someone with substantial USDT holdings, even if only a fraction of the actual transaction occurred due to the possibility of leverage, converted their stablecoin holdings to Bitcoin exposure, if not the actual coin. Another strange occurrence? Recall a moment ago when we discussed Chinese corporate debt? Here's an intriguing fact. Bloomberg Businessweek published its cover story, "Anyone Seen Tether's Billions?" on Thursday. At the conclusion, author Zeke Foe writes, oddly, "Upon my return to the United States, I obtained a document detailing Tether Holdings reserves. It stated that they include billions of dollars in short-term loans to large Chinese companies, an activity avoided by money market funds. And that was prior to the collapse of one of the country's largest property developers, China Evergrande Group. He continues. While Tether has denied holding any Evergrande debt, Tether's lawyer, Stuart Hohner, declined to comment on whether Tether held any other Chinese commercial paper. He stated that the vast majority of the company's commercial paper has received high ratings from credit rating agencies. What is on Tether's books is kept secret from the rest of the world. However, if the mystery buyer came across the same document as Bloomberg's foe, or other compelling evidence that Tether is indeed exposed to China's credit market, they would have a strong incentive to sell USDT. Even $1.6 billion in a single transaction. Again, this is pure speculation. We may never know the trader's motivation unless and until we discover who did it. Nor will we know if the move was the correct one, particularly if the contagion spreads to cryptocurrency. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.